I had in my mind, of course, couple things. It's probably a little too late for the spring real estate market. You're always like, that kind of starts in February, but also
I can do that. We can do whatever you want.
Oh no, but then I just kind of wondered, well, hey, maybe this is a very unique real estate market. Maybe just not a whole lot going on, such low inventory, and a little bit of a unique and I don't know, not that it's slow. What's the word? Quiet real estate market, just in terms of lack of
inventory still. Yeah. But everything is actually quite busy.
Yeah.
But there are a lot of different things. I wasn't sure. This is how you and I roll generally anyways, is like, what are we going to talk about? And then, the night before. So we can talk about anything that you want to. And we're going to do this, straight. We have 2 hours, so it doesn't matter. We can talk about anything and everything.
Yeah.
But with the market, just to sort of get into that, it's been a lot of like, there's no inventory. So when things go on the market, we're still seeing things go quickly.
Yeah.
One of the things sort of that goes with what I wanted to talk about a little bit today, just because I'm sort of in it myself and a lot of my clients are going through it, is where do people, like the older boomer generation, where are they going? Are they aging in place? And I'm telling a lot of people, just do that, age in place, because it doesn't make sense financially. There's just nowhere to go.
Yeah.
So there isn't even a way to do a lateral move. So, and Melissa Wallace just
walked in. I
wondered
if Melissa was going to be here. Do you want me to move my stuff?
Yeah, she's going to go set up. But thank you. She just brought me coffee.
Good morning.
Doesn't she? She looks
so pretty. Yeah.
We're doing a little Mother's Day event today.
I forgot that we're on camera here on your show.
Yeah.
I normally roll into my show with like my leggings and my workout gear on,
We do
because I'm
too.
never on camera.
We do too sometimes,
And
by
I
the
just
way.
happened to get dressed and do my hair this morning, so thank goodness for that.
I'm having a hot flash though right now. Hot. Can you say how hot I am? Yeah, a little dewy. Yeah. So, so we're on, because we're on Facebook and YouTube and all of our live streaming. I know I should have asked Melissa to sort of fix things up there, but it's all right. But yeah, the market, it's still low inventory. Things are going quickly, but then there have also been a lot of changes because, especially in new construction, as you know, I do a lot of new construction. So there's all this talk about the tariffs and things like that. So like, I thought that you might
price of homes increasing and going forward and things like that.
Yeah. Yeah. Just the cost of supplies when we got so much from Canada and everything. I need an update on all that though. I sort of been on the back burner for a couple of weeks now. Are they still holding strong?
It's hard to keep track. I was actually just trying to catch up on my financial podcast this morning because I sort of lost track and I had a week off, not this past week, but the week before for the girls' April break. So I lost track a little bit and things have been changing very, very quickly. So I think we are, tariffs have went up and then came back down through successful negotiations and are still high on China, but I think not so much
for Canada.
Yeah, I lost track. Don't quote me on that.
Yeah. All right. Yeah.
Like I said, still catching up on all my financial podcasts from the last couple of weeks, but
yeah, I've been listening to podcasts going back and forth, dealing with my father and everybody. I always talk about my personal life here. So yeah, my dad is in the hospital right now and, just been working through some of that, but he's all the way in Everett. So like I have a good, first of all, kudos to the people who actually drive into Boston every day.
I know.
I would literally,
in general, yes.
I would pull my car over on the side. If I had to do that every day and knew it was sort of long term, I'd pull my car over. I would get out and I would set myself on fire.
It's terrible thing to say.
I know, but it is a lot. I mean, that traffic is crazy. So, but they should have just left it where people could work from home. I don't even understand.
Yeah,
so,
I agree.
Yeah.
So one of the things we wanted to talk about today was, your father and the situation you're going through with your family is sort of top of your mind. So, leaving a legacy was one of the topics you suggested that we touch on today, from a real estate perspective and also from just a broad general, financial perspective. So can certainly talk about that. But I guess you do a real estate show every week. I don't. So I did want to catch up on, it seems to me like real estate. I mean, we could probably spend a whole hour on talking about, the extraordinary price increase and growth in home equity that people have seen in the last really 5 years. Really, this is kind of a post-COVID thing, and it's hard to imagine and end in sight. Of course, whenever we're on some sort of a track, whether it's real estate or financial markets. It's hard to imagine it changing, but it is hard to imagine that changing because of this lock-in effect we have where mortgage interest rates are really low. We're on this.
I literally wrote down lock-in effect.
What do we do? A show
see
once a year, but we're always on the same page. We always work work well together, but. So yeah, I mean, I guess I was, in thinking about some of my comments this morning, you probably know, and you've probably, we've given each other a hard time about this over the years, but I'm like a bit of a real estate skeptic. Like I don't love, like, I'll never have an investment property. I don't even like, want a primary property. I'm just like, for me, it's like there's a lot of reasons, like the work associated with that and the lack of time that, I personally have right now in my life to deal with it and things like that, and the expense. And I've always been a little bit of a skeptic about, what's the true growth of this piece of real estate, because when people think about, how much is my home appreciated, it's always like, well, this is what I paid for it. This is what it's worth now.
Yeah.
And people tend to not really factor into that math, all the expense of the home over time. But cannot argue that in the last 5 years have had incredible growth of equity and in real estate, and just prices of real estate, particularly in this area of the world, but probably the country in general. And so yeah, it's good. It has been a good 5 years to be a home owner.
Yeah.
It's a terrible time to be a home buyer.
Yes.
But a great period of time to be a homeowner.
And things are changing throughout the country. And that's one of the things that I really like to watch and sort of navigate through. Every morning I do this podcast type thing, but we talk to each other, and it's agents throughout the country in different areas. And I tend to feel that whatever happens in our sand states, so like Florida, Arizona, like those areas, it tends to come this way. And it's recent. Mark and I, for Easter weekend, we went and visited Mackenzie in Dallas.
Okay.
Wow. It was so interesting. I don't think we'll ever see that market, only because they have so much land there, right? So there's so much new construction. So we were looking at houses because Mackenzie's looking, to purchase a home, and she knows she's going for her PhD. So she knows she's going to be there minimally 6 to 10 years, right? So she's very sort of financially savvy. Like in her head, she's like, why would I throw my money at somebody else's mortgage? I'm better off having my own mortgage. And I'm trying to explain to her, well, it matters when and how you buy, because sometimes it's better to just rent.
Yeah.
Right. When we were there, we went and looked at a couple open houses, and I was like, wow, it's interesting to me. Like the price of these houses are just so reasonable. Like you can get a 4-bedroom colonial home in the like 500.
Oh, wow.
Right. For that's a resale. And so we went and we looked at a couple. Another scary thing for me was it said open house 8 to 7 p.m. And I was like, wow, that's a long open house. Like I can't
8 a.m. to 7 p.m.
Yeah,
oh yeah.
yeah.
Oh duh.
Yeah. I'm like, wow, that's a really long open house.
Yeah.
So we went and we got there. Well, you get there, there's a sign with a QR code, and you scan the code, you take a picture of your license.
Oh, and you let yourself in?
And you let yourself in.
Oh, interesting.
Yeah. So that's maybe a wave of the future that we might see around here. And again, I only saw that in vacant homes. I would never allow that in somebody who had
your personal property inside of that home.
Yeah. But when we got in there, these houses are tired, like really, really tired, and a lot of flips, but not great flips. It's almost like, you can put lipstick on a pig. Some of them, I was like, Mackenzie, the only way I can explain this to you is, they have granite, but it's like not lipstick on a pig. That would be more painting and stuff like that. But if they did the whole kitchen over, I was like, it's almost like they put filler in their lips instead of the lipstick.
A little plumper on.
A little plumper. So, but when I was looking at that, and it was so interesting to me, I was like, what? So finally we bumped into people that were actually hosting the open house. And I said, why are there so many vacant properties here? I just don't understand.
Yeah.
All of these properties, where are all the people going? Because we do know that a lot of people have navigated towards Texas, right? A lot of people left some blue states to go to the red states, right? I mean, even recently, there's been a huge migration to Texas. So they said, because there's so much new construction, that people are leaving this house and they're buying new construction.
Okay.
So then I was like, well, let's go look at a couple new construction, which I love anyways, because that's my wheelhouse too. So we went and looked at them, and I was like, for $535,
So $35,000 more dollars.
Yes. I can get a brand new home.
Well done.
4 bedrooms. Well done. 4 bedrooms, 2.5 baths, walk-in closets, fully like quartz cabinets, pantries, everything.
Right. So that's a no-brainer.
It's a no-brainer. Yeah. So that's why though that resale market, I think that Dallas, again, that area, she's in Richardson, a little bit, south or west or wherever of Dallas. So that's going to be a huge problem.
It's falling.
It's
prices
falling.
are falling.
So I did a little research and I talked to one of my friends over there and I asked her what her absorption rate was over there. And they have about 6 months of inventory. That means they are flipping to be a buyer's market there.
Okay.
Versus here, where we probably have 1 month of inventory, so we're still a seller's market.
Yeah. Right.
So I'm hoping that doesn't come back this way.
I don't know. Well, in that example, I don't know that that's possible because our ability to build new construction is just incredibly limited unless you're going up in a city. Where are you going? In Eastern Massachusetts?
And I was talking to my developers because I have, I work with Stonebridge Homes and I market 2 of their developments, one in West Bridgewater, one in Hanson. And we have a call every Wednesday and I was talking to them about that aspect of it. And not only do we not have the land here, for some reason or another, just the red tape of getting a development done is crazy.
Really?
They have a 6-unit that they want to do 6 houses in Avon. It's taken over 2 years to just go through the process.
Oh, because of
boards.
Oh, okay. Yeah.
So going through town halls and going through all those boards, it's making it really, really difficult to build in Massachusetts.
Interesting. Yeah. Even though there's a little bit of land if you go further west, huh?
Yeah. Well, and maybe some of those towns, I mean, every town has their own bylaws and maybe they do loosen up a little bit. I mean, I've been on plenty of boards and I tend to think that, and you have too. I mean, in Marshfield, you've been on lots of boards. Your dad has. They just let anyone on.
Yeah. Oh, yeah. There's a lot. There's no inventory of volunteers for boards.
I know.
Negative.
So anybody can go on.
Yeah, it's inefficient and they're all, independent. They're not necessarily working together toward the same objective. And I don't know if also around here, I don't know if are conservation efforts more important around here because of lack of free space. Like in Texas, there's just an abundance of space. What are they really at this point needing to conserve in terms of open space down there? Whereas it's very different here. I do think conservation efforts and protecting some of our green spaces and things like that.
I think that's important.
Certainly could be important. I don't necessarily know if that's the issue that you're talking about in terms of how long it takes to get permits to build. But I think that's just a matter of inefficient local governments and
just trying to make it, like I've been saying, I'm on affordable housing in Pembroke and we were going through this process of doing a friendly 40B. Let's put together the parameters of what, to help the builders and the developers to get to that next step. These are the things that you're going to need. These, you know what I mean? To try to make it a little bit easier for them. And we had one person who came, just came to us. We have no authority. We're just, give talking points, I guess. And, he's having a heck of a time because once it gets in front of, the abutters, it's not in my backyard mentality.
Mm-hmm. I'm so sorry to hear that. Yeah. That's
Marshfield too. Aren't they against the MBTA?
I don't have my pulse on that. I think so. I think that's the case. I don't have my, I haven't honestly paid a whole lot of attention to local government.
Yeah. Good for you that you have so much else going on in your life that you're not tied down by the boring things.
Is it a good thing? Yeah, I guess so. I think I just choose. I guess I just have to be choosy regarding what I have.
Yeah, where you
time,
have
time for, and and that's right now. It's work and my kids, and that's all I have time for. Yeah,
that's awesome. One of the things you said was lock-in effect. You want to talk about that a little bit? Because I think that's one of the problems we have as well with people. No one wants to, we have this, I call it ketchup in the bottle scenario, because people are locked into this price. So, this rate. What are your thoughts on that? Do you think you're better off just to stay there because you have a good rate, or do you think leave and have the quality of life you want?
Oh, I mean, I think that's it's hard to answer that generically, but I think the lock-in effect is for very good I think it's a phenomenon right now because it for very good reason. I mean, it's very expensive for people to well, first of all, it's very, I will say, difficult and expensive for people to move right now. So
Mm.
number one, you know, price of homes have increased. However, if you're like selling one home and buying another and they're comparable, that shouldn't necessarily be a
Mhm.
hindrance, right?
Mhm.
And so we can kind of take that off the table. However, if you have a mortgage on your home and you're buying a home with a mortgage, then even if you're selling your house for the same price as you're buying your next house for, it's still going to be more expensive to be in that second house because your cost of financing will be substantially higher with
Mhm.
today's interest rates. A lot of people have 2.5, 3.5% mortgages, and the payment on those is much lower than a payment on a mortgage of the exact same amount at 6.5%.
Mhm.
So very expensive from that perspective to move. So that has created this what people are calling the lock-in effect, where why would people move? Because financially it's just not making a lot of sense if you're purchasing with debt, which a lot of people, maybe I shouldn't say are, but
Yeah.
want to be, right?
Yeah.
Very obviously very common. I don't know what like long-term statistics are, but it's certainly incredibly common for people to be purchasing a home with debt, more common than not, right?
Mhm.
Historically,
Yeah.
probably not the case now, but because you'll please comment on this, but from what I'm seeing now, it's very difficult to buy a home also because it's such a competitive environment because of low inventory, that still those cash buyers, I'm sure, are winning out on the
Mhm.
majority of the home purchase bids.
Mhm.
And so it's very difficult to be a buyer when you need debt right now, and that's
Mhm.
like the majority of people.
Yeah.
And so of course we've seen this, this is the last several years, right? We've seen this evolution of, it's almost impossible to win out on a real estate bid in this area of the world anyway, when you need a mortgage. And so people have had to get creative with, where can I get money to buy a house for cash and then I finance it after the fact, right? And that's, borrowing
Mm.
from family members, or closing certain accounts and reimbursing, and of course then the risks associated with that and all that stuff. And like it's impossible, it seems like it's impossible in this area of the world anyway to sell first, buy second, which is,
Mhm.
the from a transaction perspective, from my perspective anyway, is the ideal way to purchase.
Yeah.
More comfortable for everyone, makes more financial sense, but very difficult right now. So
Did you see a lot of people, and it isn't as crazy as I would say, like, I'm not seeing as much of the cash, like, you know what I mean? Like people lining up in 20 something offers and cash.
okay,
Did you see
good.
yeah, I know.
Yeah.
But did you see a lot of people who were thanks, Melissa. I texted Melissa to bring me my
Oh,
laptop.
okay.
And does that look all right? Like, can you fix us up there, the screen and all that? I don't know. I don't want to make sure it's on there right. Um, but I think a lot of people with, did you see a lot of people who were taking money from their 401k and like trying to, because we saw that at one point where, this dad was taking out money for, like, they were giving us their 401k statement saying, okay, he's cash. My son is cash. We're going to lend him
Yeah.
this money.
Not specifically 401ks, just because we don't personally manage a lot of
But
401k,
you
but
know what I
yeah,
meant?
your
Yeah.
retirement assets and
Retirement. Yeah.
investments. I saw a fair amount of that. I mean, certainly there were situations where I advised against it. I mean, if you're literally talking about 401ks or IRAs or comparable accounts, what we call tax deferred retirement accounts, right?
Hmm.
Just the taxes associated with taking a significant sum of money in the hundreds of thousands of dollars from a retirement account. The tax burden on that, if you don't get the money back in very quickly, it can be quite substantial. So certainly a lot of situations where, I had to talk people through that and really advise against it.
Hmm.
But I've seen, people that have assets outside of retirement accounts where it's a little bit more tax efficient to come up with cash to purchase a piece of real estate and then kind of pay their portfolio back.
Hmm.
Yeah, certainly have seen that. I've had also a lot of conversations with um, people with adult children that are looking to be first time home buyers, and
Hmm.
talking through the difficulty of that,
Hmm.
for their adult children. And Even people that make good money now, if they're on one income, the difficulties of purchasing a home right now on one income and having a sizable enough down payment, especially to avoid PMI, plus where interest rates are. And, mortgages are just very expensive now, and the financing costs associated with that, with interest rates where they are. It's just, so certainly I've had a lot of conversations with people about, what can I do to take money out of my portfolio? Can I afford to do this and help my kid? And had a lot of conversations like that.
Yeah. It's interesting because as you're thinking about that, I'm just thinking about different pockets of money and where they are. And can you, one of the things you're talking about with, you need both people have to be working, but also think about so many people with college debt.
Yeah.
And there's just so much. And then I don't know why, right when they get out of college and get their first job, they need a car that's over $800 a month. Like we see it all,
Oh, yeah. Yep.
But I'm wondering, do you suggest to people? And again, I've just flipped this back to you because as much as you want to talk about real estate, I want to talk about the finances.
We've got 90 more minutes. So
I know.
We're good.
Yeah. Do you suggest that people have like maybe just a pocket? Like, I don't want to say under the mattress, but maybe not so tied up that they can't get to easily?
Oh, yeah. In general, you mean assets outside of retirement accounts? Yeah, I guess it depends on the age and the situation of the person that you're referring to in your example. But yeah, and I could spend a whole lot of time actually on this topic, but yes, it often makes sense for people to accumulate assets and have assets outside of their retirement accounts. I mean, obviously cash, like emergency cash, not literally under the mattress, because we can have pretty good CD rates right now, so you could get some yield on your emergency cash right now. That does make a lot of sense. I mean, it depends on the situation and the ability to accumulate money. But if possible, yes, I love for my clients to have what I call like tax diversification in their accounts and their portfolio, because it opens up more opportunities later to get money more tax efficiently. So I like my clients to have not only retirement accounts that they've funded, and they get the tax break and stuff when they fund that earlier in life, and that makes sense from a cash flow perspective. But diversification is great when it comes to where their money is. Roth IRAs, love those. Non-retirement accounts, those are great. It's good to have money in different places. And this is a good example of later in life why that makes sense, because sometimes you find yourself in a situation where you need a big sum of money, or you want a big sum of money. And if you need $100,000 and all you have is money inside of a pre-tax 401k, it depends on your tax bracket, but you probably have to take out 150,000 to get 100. And that hurts. From that tax liability perspective, it just hurts. And so it's kind of nice to have another account where you can get 100,000 and maybe it only costs you 10,000 in taxes. Like it's not as impactful from a tax perspective at that time. Of course, you already paid your taxes on that money, so you're gonna pay your taxes at some point. But it's kind of nice to just get it over and done with.
I haven't found a way around that yet.
Good luck. Yeah,
I know.
These are good people that have large tax burden. Congratulations. It's a good problem to have.
Your dad said that a long time ago. I remember one time, I had to pay taxes, and you know what? It's a good thing, so.
One of my clients was complaining about having to write like $180,000 check to the government. And I was like, good for you.
Yeah.
That's one.
Congratulations.
That's one. And he's like, thank you. Yes. Yeah. You're right. Life perspective right there.
Absolutely. What are any other things that you want to hit upon too? Because I know I sort of took over and went a different way as well.
No, my brain's going in a million different directions. Do you take a break mid-show?
We don't take a break. Schedule? Yeah, we don't take a break. We can if we want, but I tend not to. But
right.
I will let our listeners know you are listening to Talk Real Estate Roundtable. I am Sharon McNamara, the broker owner of Boston Connect Real Estate. The other familiar voice you have here is Alyssa McNamara Reed, of course, from McNamara Money and McNamara Financial, of course. So we're here doing 2-hour shows, and we like to do this at least once a year so we can go back to back. Had to get Alyssa Alyssa out of bed this morning, and she does not miss this 8 a.m. hour. So
no, not at all. Do I look tired?
No, you look perfect.
Absolutely.
Look
marvelous. Yes.
Marvelous.
I'm refreshed actually to hear you say that you're not seeing a lot of cash purchases in real estate. Can we talk about that a little bit?
Yeah.
That warms my heart a little.
Yeah.
For my clients' benefit and anyone who's looking to be a buyer. So that's changing.
It is changing. And as much as I'm saying we have low inventory, we are seeing some multiple offers, and it is really dependent on where that price point is, and what, what range people are in. Sometimes we're seeing multiple offers. Sometimes we're just seeing one offer on a house, so. And what I'm seeing from our agents is this anxiety of, oh my God, the house has been on the market for 2 weeks and I don't have any offers. Right. So
compared to the last 15 years, that's probably ridiculous, right?
Yeah. I mean, it's crazy. So people, we're just so familiar with, putting it on the market, you having that weekend, having multiple offers and going from there.
Yeah.
And we were seeing a lot of, I called it reckless. I've been saying on the radio for a long time that market was reckless. I wasn't comfortable in it.
Yeah.
As much as I am fast paced, I didn't like that pace for people who didn't understand what they were doing.
Sure.
Right.
Yeah.
So we would always try to slow them down. And, in one of the big things is there's going to be a big change going on in our state that actually goes into effect in June and July. I think that they pushed it out to July. Because as you were talking about it, I wrote down new laws, what people were doing to get their offers accepted. I'll do cash. I'll waive my appraisal contingency, like anything that they could do, their mortgage contingency. And one of the big things that they did was they waived their home inspection as well.
So that's not happening anymore?
Well, it's not going to be able to happen anymore.
Thank God.
I hated that.
That was awful.
It was and we never suggested that for anybody. In fact, if somebody said, I heard, because again, in real estate, everybody has an opinion about it. You know what I mean? So
like everything in life.
Oh yeah. Yeah. But they're like, oh, my uncle's brother told me that this is what we should do in order to get an offer accepted. Okay.
Oh, I've never heard that in my business. My son told me to buy this stock. Yeah.
Exactly.
Yeah.
So, we were hearing a lot of those things. We actually had a form that we made people sign that just basically said, this was your idea, not our idea.
Yeah, that's smart.
And there were a lot of agents out there that were recommending that because it was true. It was something. If you didn't have a home inspection, you were probably better chance. Yeah. So there's a new law that's going into effect in Massachusetts, and it is going to prevent that from happening. So now,
that's a good thing,
so now the to have a home inspection will not be part of the offer, but it's almost like lead paint. You have a 10-day opportunity to have that even after. So
and to back out of the deal.
Yes,
in the event you find something you don't like.
Exactly.
Yeah,
so now it would be okay. I'm going to have a home inspection, or I'm not going to have a home inspection. So the seller was very privy to who was and who wasn't. That will not be on our offers anymore. So now it will just come to us. I'm going to have Amy Mesfer come on from Mahoney Law and talk about this. She did a class in our office a few weeks ago. Now the form will not have it on there. The seller will be looking at offers just based on, the financials of it basically.
Okay.
And then after the fact, if their offer gets accepted is when we would find out if they're going to have a home inspection. I think they're still trying to iron out like how long do they have until after their offer is accepted?
They opt into it, you mean?
Yeah.
Or they have a window of time where they can get it done?
I heard 24 to 48 hours, which seems reasonable. Like if your offer gets accepted, now it's like, okay, I am going to have that home inspection. I don't expect the seller to wait another 10 days for you to make that decision.
Sure. Yeah.
If you're going to or you're not, because that would really slow down the market.
Right.
Really slow down the market.
Are the home inspectors still around? They're still employed? Because
Yes.
they probably haven't been all that busy the last few years.
Yeah, they're probably very happy about this actually.
Yeah.
And I think one of the other things we'll see, and I know specifically some of our WATD listeners have contacted me on this in the past, and I've met with people who have done pre-home inspections. So we might see more of that. So the
meaning before you put in the offer?
Before you go on the market. So as a seller.
Oh, okay. Oh, that's great.
Yeah. Right? There's pros and
conflict
cons
of interest there, maybe.
Well, pros and cons to it. It matters what type of house you have. I mean, you have a 4-bedroom colonial. You're not expecting anything to come up. But I think about your house. I mean, when we did the home inspection for your house, the seller was probably more surprised than anybody about the termites.
The radon. Oh,
remember
and
the termites?
Oh,
remember?
yeah. Yep.
I mean,
and the radon. They had no idea.
They had no idea. So this will be a good way for them to find out, but they also have to be very cautious too, because if it's disclosable items, everything has to be disclosed. Not that you would want to hide anything, but now you're going into it like, oh, I found termites. Anyone who finds termites, by the way, is definitely going to take care of it. No one wants that in their house, whether they're selling or not. And then with the radon, but that's easy to mitigate.
Yeah.
So if you're a seller, you can take care of some of those things beforehand.
Yeah. Actually, that's nice. Yeah. And then what the buyer gets the report, and this is what's been done. And I think that makes sense. It's a very responsible way to proceed with the transaction.
And they do it a lot in a lot of other states. I have one of my friends who's an agent in Pennsylvania, and that's what they do. You know what else they do there? They call it a BFI, and I only remember because of the BFI truck, like trash company. That's how I remember it.
You're talking about. Okay.
It's like I don't even know what it stands for, but it is called a BFI. But buyer financial something, and the buyer has to give with their offer all of their financials. I just can't even believe they do that.
Meaning like their income and their net worth, like
income,
a tax return,
all that type
like,
of like not maybe the income, not maybe the tax return,
versus
but like
just a pre-qualification letter.
Yeah, a pre-approval letter.
In some states, that's required. Is that what you just said?
Yeah,
Oh,
Pennsylvania. Actually.
Oh, okay.
Yeah, you have to give that. And I was like, well, what do you do with that information? And she's like, well,
Yeah.
I review it with my seller. And I tell my seller, it looks like they have a lot of debt. And like, do you want to take a chance that this will go through? And I go, but you're not a financial advisor. You're a real estate agent. So why
isn't that the responsibility of like the loan officer?
Loan officer. Yeah.
Oh.
Yeah. So I was like, you're taking on more than I would ever want to.
Yeah. Interesting.
Yeah. So she thinks we're crazy because we don't do it.
Breach of like your person, your privacy.
That's what I said. I was like, well, I'll never be buying a house in Pennsylvania.
Mm-hmm. There are some beautiful areas of Pennsylvania, and it's probably very reasonably priced.
Yeah.
Many areas anyway.
Because you went to school there?
I went to school outside of Philadelphia, at Villanova.
Yeah. I toured that campus.
Go Cats.
Yeah.
Oh, yeah, that's right. Casey looked at law school there, right?
Nope. She looked at undergrad there.
Oh, okay.
Yeah.
Okay.
And she ended up at Fairfield.
Right.
Yeah.
Oh, I forgot that. And then she went to law school at BU?
BU. Yeah. BC waitlisted her for undergrad. So when they wanted her, no, Casey's 30.
I know.
I heard Casey actually, and this is the good thing too, is I love, I'm going to talk a little bit about you because right now you're my guest, and then I'll be your guest, right? For the second hour it's
so much easier when I'm your guest. You get to host.
Yeah. But I know that Casey had told me that she had recently reached out to you because, you are helping people with, some of these financial decisions on where should I be putting these pockets of money, right?
Yeah.
Like sort of like the question I had just asked, like, am I better off having some money here under the mattress, so to speak?
Yeah.
Preferably in a CD or whatever. What are CDs getting? Oh my God, my ADD.
Something like four, probably four.
Okay.
A little over $4 right now.
So if you're getting like 3.5
to 4,
if you're getting 3 in a savings account, pretty safe to keep it there for a bit. Okay.
Yeah. I mean, no redemption fees, stuff like that. More liquid savings account. So it would be reasonable that that's a little bit lower interest rate than a CD, which is you're locked in.
Yeah.
For a period of time.
Yeah. So Casey's talking about the whole, getting rid of some of that stuff too.
Yeah.
Yeah. And I won't get too personal, but like then, I have the conversation. Hey, I'm an open book. I don't even care. And I had this open book. I said to Casey, I was like, hey, when you're talking to Alyssa about, because law school, she was paying for law school. We paid for all the other stuff for her while she was doing all that. And I was like, does it make sense for us to help her, to pay off that debt so she doesn't have the high interest rates and then she can pay us back? But that whole paying us back thing.
How's it going?
Yeah. Exactly. So, again, to our listeners, you are listening to Talk Real Estate Roundtable. I'm Sharon McNamara, along with Alyssa McNamara Reed. We're doing 2-hour show today, so her show will merge into this one. If you have any questions for us, whether it's about real estate or if it's about the financial wheelhouse, that's Alyssa's role. I love, and I probably shouldn't be like this. Like I lean into you so much with all of that I don't often think about it. Even when conversations are happening about it, I don't even listen.
About what?
Like just finances and like where to invest and to do this. And, everybody, like when the sky was falling 3 weeks ago, right? People are like, oh, well, and actually I do want to talk about that because there were some people who were like, do I take my money out now for good reason? And I want to talk to you about that.
Mm-hmm.
But for me, people are like, well, Sharon, what are your thoughts? Blah, blah, blah. And because I'm on this podcast thing every morning, and I was like, I don't look. I don't know what's in there right now.
Yeah.
So whatever I lose, I will not know.
Right. Good. Yeah.
I just won't know.
Yeah.
So it won't hurt me at all.
Yeah.
Because
You're smart.
I don't know. And I'm assuming right now you can't make eye contact with me. Did we lose? No.
Oh, no. Oh, no.
No, I'm kidding. I'm
camera.
kidding. No, I'm kidding. But, that's the thing. I feel long term, I'm not ready to retire yet, so I'm not going to look. So, but what about that huge gain that people have been making?
Yeah, well, there's a lot to talk about here. I mean,
Yeah.
So first of all, you trust me, right? So you're working with someone that you trust with your money, right?
Yes.
You trust me with your money. Thank you for that.
Yeah.
And so, you can call me anytime and talk about that, but you know what I'm going to say, right?
Yeah.
I'm going to say, I'm going to reassure you that, the right thing to do in that situation is nothing. So, I mean, and that's, well, okay, lots of different things. My mind is going in a lot of directions right now.
We're both the same, but people are keeping up with us, I'm sure.
The best, okay, so the best investors don't look very often.
Yep.
And actually it's so interesting to equate this to real estate, actually.
Okay.
So in my world, the world of the traditional, markets, you could log in and you can literally see your portfolio, your investment accounts change in value literally by the minute.
Yeah.
It can go up. Many securities are traded in the middle of a day. Some of them are just traded once a day. And so you can log in and it's different throughout one day. And actually in the last few weeks, we've had days where the markets have fluctuated substantially in value in one business day. So the people that are looking often, it's not healthy. It can cause unnecessary panic and alarm and discomfort. And first of all, what happens is the people that are logging in frequently, like every day, they're always going to think their net worth is the highest number they ever have seen there.
Yes.
That's my net worth. And then when it fluctuates down a little, they've lost money. They're not remembering the average value over a period of time. And when it fluctuates up, they've gained money. They're always looking at the biggest number they've ever seen. And that's what I'm worth. And so then it's very scary to, have that fluctuate downward and I lost money and I'm nervous and what's happening and what do I do? So it's not a good emotional state. I mean, some people are like, some people can handle it, but I think very few can handle it well.
Yeah.
So that's one. But at number two, people should be like, actually, let me go back. Let's talk about real estate and sort of the beauty of the valuations of real estate is that they're done very infrequently.
Once a year is when your assessment happens, right?
Okay. And I would like, so yeah, so you have an asset, you paid for it and you kind of like roughly know what it's worth, but you're not seeing the value of your home fluctuate every hour.
No.
In a business day.
No.
Because really that would be like, you'd have to have someone making you an offer every hour to really know what your home is worth. How do you know what it's worth? Zillow can tell you, whatever all these websites can tell you. You can estimate based on what your neighbor's house sold or what a realtor came in, but you don't really know what your house is worth until someone actually makes you an offer. And that's the financial markets. There's actually an offer to purchase those securities and someone will pay that, right? And it goes up and down based on supply and demand. And so, the beauty, like I said, the beauty of real estate is, it's valued very infrequently and it doesn't make people uncomfortable that their $1 million house fluctuated down to 990,000 or whatever, or whatever it is, because they're not seeing that. More than how often are people moving every 7 to 10 years? It's going to be longer now, but so, that the 7-year valuation, like it's,
and I think that people try to watch it, just like the people who are thinking about selling, you know what I mean? They're trying to catch it while it's on the up. There's one thing I know for sure is you cannot sell high and buy low. Generally.
True, because you're making the transaction at the same time in a market that doesn't move that quickly.
Exactly. Right. But we do see a lot of people who are like, I'm taking advantage of this market right now. I'm going to sell right now and I'm going to rent. And I think that that's fine. If you're going to another city, especially if you're rent and figure out exactly where you want to be. Right. Like for some reason or another, I want to live in Charleston. I've never even been there.
Yeah.
It just sounds nice.
People do love visiting Charleston.
Have you been? Because
Girls' weekends. No, I haven't been, but it's on my list.
Yeah. See, so I just feel as if that's not a bad idea. And then if you see things go lower, then that's a good opportunity.
Yeah.
Or, if you're go to another state or something, like I said, in Dallas, you can get this 4-bedroom colonial for $535, brand new. I mean, it's just wild to me.
Yeah.
Couple things to, so for us, the market is changing. Usually the end of the month is when we see sold units. And that's how I'm basing the value of somebody's house. Like, what is my home worth? It's worth what the other 4-bedroom colonial sold for this week. And if you don't have a sale every single day with a 4-bedroom colonial in your type of neighborhood, like so many conditions have to be exact, right? So we will do this for our clients, and I'll say, I can't update you every month, but it isn't going to change much.
Yeah.
Like you're in a range anyways.
Yeah, right.
I'm giving you a 3% on each end, right?
Okay. Yeah.
So to get you your range. So if I take your median and I add 3% to each side of it, like you're still going to fall within that range when the house sells.
Yeah.
So
that's so interesting. You said that you can't sell high, buy low in any reasonable period of time in the world of real estate.
No,
you can do that all the time in the world of your investment account. We can, a couple months ago, you could sell U.S. stocks high, buy international stocks low, and vice versa. Like you could do that in a minute, and across different types of investments. Where what are you going to do in real estate? Sell your colonial and buy a condo low, or
but you're not even going to
you're not even going to do that. Yeah.
You can't even do that.
You're going to buy a office condo, and then low, and then sell that in 10 years. Yeah, I know. That's an interesting point.
A couple of things that you had said too is, one of the things I'm curious about. Let me just see what. When you're talking to your investors, do you ever say to them, okay, you had $1 million and now you see what happened. Now you're at 800,000. I'm just using crazy round numbers, right? But do you ever say, now let's just put this in perspective. The amount of actual cash out of your pocket was $500,000.
Oh yeah, sure.
Yeah, so you do that evaluation. So like you've actually made $300,000.
Yeah,
right.
It's interesting to do. Yes, of course. I mean, the types of reports that I can provide to my clients are, people are, this year has been a good example of people focus on things in way too short of a period of time. Oh, I'm, down. I've lost, 10% or 5%. First of all, when the market was down almost 20%. That doesn't mean you lost 20% of your net worth, because hopefully you're more broadly more broadly diversified than just, owning the S&P. But yes, perspective is incredibly helpful, and I can be instrumental in that regard, or any financial advisor, could be instrumental in that regard. So, hey, Mr. and Mrs. Client, you're down in value this year, but first of all, my experience has been, it's not as bad as you think. The media is very dramatic. You're in a very diversified portfolio. Global stocks have done really well. Bonds are up in value. If you're balanced, it's really not as bad as you think. And people are like, oh, okay, that's not so bad. I'm like, turn the news off. But
get off of CNN or wherever the heck you are, whatever station you like, Fox, whatever.
But perspective is helpful. So I've been able to say things like, yep, you're down in value 3% this year, but last year you were up 16%. And the year before that was, 18% or something, and those aren't crazy numbers. 2022 was a down year, but like right now, 5-year returns are like ridiculous. And it's those longer returns that really matter.
Yeah.
And to what you just, said, in my world, we talk about rates of return and percentages and all that stuff, but also showing people the dollars is really impactful. Like you said, there are times when I can say, yep, you're down in value a little bit this year, but guess what? 10 years ago, you only put in this much money, and look how much growth you've had in that period of time. And you've beat inflation, and you've beat money market, or in CD rates and all that stuff, certainly over 10 years. And so, that perspective is really helpful. So the way that I can present things to people, I guess that sounds a little like, what am I hiding? But it's not that, but it's just like the perspective is very helpful. And you're not getting on the news lately, you're not getting any perspective. You're getting U.S. stocks are down. The tech stocks are down 30%. Well, you know what? They're still up like 50% per year over 5 years. Like it's, perspective is incredibly.
You don't
helpful.
see any of the green lines. You only see the red. They always do it in red.
Yeah, I know. And it's like, well, you're only hearing about one small subset of what a probably diversified portfolio is.
Yeah.
And
definitely flipped this right over to you, and I'm so happy that I'm able to do that with you. I hope our listeners can keep up with us. 781-837-4900. If you have any questions for us, whether it's real estate or finances, please give us a call. Tim will pipe you right over to us. We are in my home studio today. What do you think of our studio here?
I love it. I've been here before. I think
we were
a
downstairs.
long time. Oh, okay, that's what it was. Okay.
Yeah, we just moved up here recently. Yeah.
Yeah, fancy.
So one of my other questions for you, though, in regard to all of that is, when the market was dropping, and like this was just a couple of weeks ago when this was all happening, right? And the sky is falling, Chicken Little. It was just the sky is falling, the sky is falling. Everybody's talking about it. And I thought about it and I was like, think about like way back when. Like, it's so much easier now. People have their cell phones and they get nervous.
Yeah.
They tend to just trade themselves, right?
Yeah.
Rather than, that's why I think everybody should have, and I know that there are differences for you, so you'll have to explain that. Like for a I call you my financial advisor, right? I'm not going online to do anything myself.
Yeah. I actually disable that for my clients.
Yeah. So
for their own benefit.
Yeah.
But why are you hiring me if you
exactly.
You yourself? Yeah.
So like I have to call you if I want to do anything. And you can talk me off the ledge.
Yeah.
Right.
Yeah.
And now I think that do we see these rapid fluctuations based on that, where people are just in there, they're like, oh, if Buffett is selling, so am I.
Yeah. There's been a lot of research in this regard and some publications certainly that, think about, in what the 70s and the 80s and even into the 90s, like, the volatility in the markets was not as substantial. Volatility is a measure of like the ups and the downs in the market, right? The change in the share price, and more extreme volatility is like higher highs, lower lows, right? Things are moving quicker and more drastically in shorter periods of time. And as technology has improved over time and ability to trade literally, instantaneously, and information instantaneously available to you in the palm of your hands. Market volatility has certainly increased over the last few decades. And a lot of people think it's as a result of that, or partially as a result of increased ability. I mean, the market movements are really like a culmination of people's emotions.
Yeah.
All the research I've ever done in this regard, and I haven't done it super recently, but like something like 50% of the trading that's done on the markets is done by people, humans, and we have emotions. So there's a lot of emotions moving markets. Markets are just, it's supply and demand.
Yeah.
When people are optimistic and happy and optimistic about the future of the economy and business and earnings abilities, they're going to buy, and that's going to drive prices up. And when people are nervous about this, that, and the other thing, and it's always something different, and they want to sell and get out because they're nervous, that's going to drive prices down. And so it's driven by emotions, number one, but also speculation.
Yeah.
You'll hear like markets are forward thinking and speculative. It's because people are thinking they know what's going to happen and they're trading as a result. There's certainly a lot of trading done on the markets that are done by computer programs, bots, and things like that, trend following and things like that. But a lot of it is done by people with emotions.
Yeah.
And not necessarily a good thing.
Yeah. Tim, is that you trying to, do we have a call?
Okay. Yeah, we got a call.
I told you that phone sounds just like my phone.
Ring earlier in the queue too. I was like, oh, there it is.
So we do have a caller.
Yes, we have one of our great callers, great listeners, Jay from Plymouth, but he's rolling around the South Shore today.
Hey, Jay.
It's a great day out there.
Well, good morning, everyone. I thought maybe Tim fell asleep or something like that.
I think I just couldn't shut up. I think maybe
exactly.
that's what
Alyssa
it
was on a roll, and I hate to interrupt her roll.
I know she gets so like energized by this. It's like my favorite part of her. Yeah, passion for sure. What's going on, Jay?
Okay, I don't want to point any more fingers, but hey, when I originally started listening to you guys, when I got in the car, I was so the home inspections. I want to touch on that. Could you somewhat explain, go in a little detail about home inspections and what they do, who they're reported to, who paid for them?
Yeah, absolutely. So the way that it is right now, or the way that it's going to be?
Both.
Okay. So the way that it is right now is if you are a buyer, you put in your offer and part of your offer, you'll have contingencies. So the contingencies would be like, I have to get a mortgage. So how much is that mortgage contingency? There'll be appraisal contingencies in there, lead paint, all those things that you can do. And home inspection is one of those contingencies that you can have as a buyer. In the state of Massachusetts, by the way, every buyer should have received from their agent the Facts for Consumers, which talks about home inspections, which is crazy to me that we're getting to this level because, and here's the other thing with our state, it's a document that they created that we have to give, but there's no signature line on it. So we had our own signature line on it because we have to legally give it. So it is your right to have a home inspection. So if you as the buyer do the home inspection, that is your home inspection. You paid for it. It is all yours. So a lot of times buyers will have a home inspection. They'll try to renegotiate with the seller and they'll send over the entire report to the seller. As the listing agent, I won't take it because I don't want to see everything. I don't know who your home inspector is, but there are things on there that he said were wrong that are now disclosable. But you know what, Jay? We hear our music, but if you want to hold on, we can, go into Alyssa's show because we're here for 2 hours today. So I'll leave that up to you. But
I think they do the news for 6 minutes, though, just FYI.
Yeah. So you. Okay. So that is my music here. So Alyssa, thank you. Alyssa McNamara again.
You're welcome. Stay tuned.
Yeah, stay tuned. We're on for another hour. Thank you, Tim. And we're not going anywhere.
Don't touch that dial.
Would you be mine? Would you be mine?
Yeah.
It's a neighborly day in this beauty wood. A neighborly day for a beauty. Would you be mine? Would you be mine? I have always wanted to have a neighbor just like you. I've always wanted to live in a neighborhood with you, so let's make the
The South Shore's first choice for live team coverage of breaking news, emergency traffic, and severe weather. 95.9 WATD FM Marshfield and 95.9 WATD.com.
This is CBS News on the Hour, sponsored by T-Mobile Business Advantage.
I'm Michael Wallace. Australians have re-elected Prime Minister Anthony Albanese. He's the first PM in 21 years to win his second three-year term.
Today, the Australian people have voted for Australian values. For fairness, aspiration, and opportunity for all. For the strength to show courage in adversity and kindness to those in need.
His left-leaning Labour Party retained its majority in Parliament. The U.S. Army confirms there will be a parade celebrating its 250th birthday next month. CBS's Ed O'Keefe.
The final cost of the parade is still being determined, but one defense official tells CBS News early estimates put it at tens of millions of dollars. Held near the National Mall, it would involve more than 6,000 troops, 50 military aircraft, plus 150 military vehicles like Bradleys and Strykers. Also tanks. The U.S. official tells CBS News they'll likely have to be put on flatbed trucks to distribute their weight to prevent damage to roads. President Trump's been calling for such a parade since his first term. It's scheduled for June 14th, which besides being his 79th birthday, is also the 250th anniversary of the Army.
The administration is asking the Supreme Court to let DOJ look at Social Security data.
Loyola Law professor Laura Levinson says the information the DOJ is seeking is unprecedented.
It's very confidential. It's regarding people's salary and even their medical benefits. So there's been a major pushback on the effort of DOJ to get this information.
Levinson says much of the pushback has been led by labor unions.
I think the Trump administration is hoping that the conservatives on the Supreme Court will see it their way. But that is not at all clear.
Linda Kenyon, CBS News, Washington.
A new tariff on auto parts took effect this morning.
President Trump signed executive orders earlier this week that soften the blow of tariffs for automakers.
But still, these are thousands of dollars for individual cars.
The principal and CEO of Anderson Economic Group, Patrick Anderson, says cars like the Honda Civic, Ford Explorer, and Chevy Malibu that are assembled in the U.S. still have imported parts. Tariffs will raise costs by $2,000 to $3,000. He estimates costs will rise up to $12,000 or even $15,000 for cars made in Asia or Europe.
The impact of these tariffs is going to vary widely.
Wendy Gillette, CBS News.
The Kentucky Derby is this evening. Jockey Umberto Rispoli will ride 3-1 favorite Journalism.
It's a wide open race. I mean, I'm a sit on the horse, then he shows some potential, some qualities, but I have to respect everybody in the field.
The real estate
This is CBS News.
I guess not as competitive.
If you're 55 and up, T-Mobile has plans built just for you. Get the savings you want on America's largest 5G network. Visit T-Mobile.com/choice55 and start saving today.
95.9 WATD. Good morning. 9:03. Sunshine and bright. Looking great out there. 68 outside our studios. Getting up to 81 today. Overnight tomorrow. Yeah, it's going to be damp. So get out and enjoy today. Tomorrow, not too bad either. It's just not quite as sunny. Here's Bill Guy with all the details. Good morning, Bill.
Well, we're in for a little bit of an unsettled weekend weather-wise with some threats of rain showers around. But it's certainly not going to be a washout of a weekend by any means. So any outdoor activities or sporting events that you're going to be planning on attending should be just fine.
It's warm out and it's humid.
You might want to keep an umbrella handy, though, just in case. Something does tend to pop up, but anything that does looks to be brief. And for this morning, we're starting the day off with some low clouds and areas of fog. But by midday and into the afternoon, at least partial sunshine developing, and the day is going to take on a somewhat summer-like feel. It'll be slightly muggy. High temperatures are going to climb into the low and mid-80s away from the coastline, especially the south coast. And if you're down towards the Cape and the islands, it'll be significantly cooler in the upper 60s to near 70 degrees. The reason I'm going to have a southwesterly breeze today.
No, I do like Ember once in a while. We go with my dad, but
now for tonight there'll be a couple of light rain showers,
Plymouth and Portage Park.
Shower around.
They have a big, nice bar, and they have live music every weekend, and it's just like a fun ambiance there, and it's
busy. May end up just
and
staying dry the entire night with cloudy conditions. Those dropping back to the mid-50s. For your Sunday, still plenty of clouds
maybe this
around.
Time of year it'll start getting more
brief passing shower. But it will be cooler with highs in the mid-60s.
Yeah, we've been enjoying that. I'm not
Monday,
sure if we'll be able to get to
partial sunshine, lots of clouds, a threat of a shower, the high near 60 at best. Tuesday, we get back into the low 60s, but we're still dealing with a lot of clouds and a threat of showers. For WATD, I'm Precision Weather Forecasting Meteorologist Bill Dial.
Thank you very much, Bill. If you miss any of that forecast, you can go to our website and also check out our live stream if you're outside of our FM signal range, 95.9. 959WATD.com. You can tell your smart device to play WATD, and of course, there's the Odyssey app. McNamara on Money's coming up. Part 2 of Sharon and Alyssa together. Well, Alyssa will take over the hosting duties for this hour. Quick look at the roads. Things are looking great. Up in Boston, Lever Connector, Tobin Bridge, Zachem, Tunnels, Charles
so it did change
roads. All fine. Route 3, 24, 95, 93, 44, Cape roads. They're all great. Traffic on the 9s every morning. I'm Tim McKinney for WATD.
I don't know. We've kind of moved.
Now, time for McNamara on Money, sponsored by McNamara Financial Services.
Good morning and welcome to McNamara on Money. I'm Alyssa McNamara Reed, a certified financial planner professional with McNamara Financial in Marshfield, Mass. This is a financial talk radio show for people who want to get all areas of their financial life in order, get their kids through college, and live comfortably in retirement. On this show, we will be talking about a wide variety of financial topics. You have to make many important decisions in your life that have to do with money, investments, insurance, mortgages, taxes, estate planning, living your life within your means, and retirement. Our goal is to help you with all of these. We also have lots of great information on our show's website, McNamaraOnMoney.com. You can download podcasts, watch videos, or browse our abundance of written articles on topics related to personal finance. And as always, to find out more about our practice, visit McNamaraFinancial.com. So grab a cup of coffee, sit back, relax, and enjoy the show. Good morning. You're listening to McNamara on Money. I'm Alyssa McNamara Reed. Actually going on the second hour of our double show this morning with Sharon McNamara of Real Estate Talk Real Estate Roundtable and broker owner of Boston Connect Real Estate in Pembroke. Good morning again.
Good morning.
We've done, this is the second hour of our double show this morning, 8 to 10 this morning. Yeah, I guess we do this about once a year. Did we do a double last year? I think we did.
Yeah.
And we had, remember we had a bunch of guests when we did that last year. Oh, that was such good planning.
Yeah.
I think that was you.
Yeah. We had a bunch of different attorneys on with us. Yeah, that was good.
We're talking about sort of all stuff, real estate market, financial. We might get into our leaving a legacy, discussion before the end of the show this morning. But before we get there, we did have a caller tail end of Sharon's show. Jay that had a question regarding the change in the laws regarding home inspections. So do you want to continue that? Do we still have Jay with us,
Jay
by the way?
still with us?
I'm still here.
Oh, okay. Great.
Hey, Jay. You're just driving around the South Shore, right? So just to recap for our listeners who are just joining us, the question you had asked is who owns the home inspection after it's completed, correct?
Correct.
Okay. So the way that it is right now, and if you as the buyer have the home inspection, that report is yours. Okay. It always will be. Whoever's paying for it, that's who it actually belongs to. So now when the laws change, it will still be the same way. It's just that when you put an offer in, it can't be based on whether or not you're having a home inspection or not. So the state wants to sort of control that a little bit more, where you're not going to be, your offer isn't frowned upon because you're having a home inspection. Everybody should be able to do that, right? So at that point, when the buyer is going to be doing the home inspection, they're still going to own it. If the seller chooses to do a pre-home inspection, which I have had many of my clients, I'd say several, do a pre-home inspection, well, that report would be owned to them. But it is up to each individual party if they want to share that information with the opposite side.
Even under new law, it will
Even under
still
new
be,
law. Yeah.
okay.
Yep. So I could, and I was talking about how they do it in Pennsylvania. A lot of people will do the pre-home inspection. If I do a pre-home inspection and I have the report, I could say to the buyers, hey, here's all the information on the property. Before people even put the offer in, I had a home inspection. This is the home inspection company that I used. And if you used one of the well-known ones in the area, then most times the buyer's agent is going to know who they are anyways, and they'll know whether to trust that information or not. Here's the full report. But anytime you do a home inspection, every home inspector is going to find something different and concentrate on certain things more than others, right? So, yeah.
So this goes into effect June, you said?
June,
next month?
Yeah, it goes into effect in June.
Okay, that's good.
But I don't know if they'll really start rolling it out until July. It might have got pushed out because we have to change all the forms, like all the Massachusetts realtor forms have to be changed, all the contracts.
Yeah.
So was there a particular reason, Jay?
It's a good tool for everybody.
What's that?
It's actually I think a home inspection is a very good tool for both.
Oh, absolutely. Yeah. I think this sounds like a good law.
Especially when you're selling your house, you don't want to go all of a sudden have something major pop up. And that's just going to delay you selling your home.
Yeah. Well, it's certainly good for buyers. Then,
Yeah.
it's been easy to be a seller the last several years. Maybe this makes it a little bit more difficult, but but in general, good thing. Yeah.
And if they do have the home inspection, I mean, here's the thing: the home inspector could say, okay, it looks like the age of the roof, like the roof looks to, starting to dry out or whatever, the shingles. The house will be priced according to the condition the house is in. That's what I always say anyways. If there's a hole in the roof and the seller doesn't want to fix it, I will say the house is priced according to the condition it's in.
Right.
Like I'm going to put that into my calculations,
right,
I'm not going to compare a house that is, tired versus a brand new construction house.
Yeah.
So was there a particular reason why you asked that, Jay, though? Like who owns it?
Well, eventually the house is going to be going up, but I just wanted to be crossing my T's and dotting my I's. But quick question for you. So, in your experience, in your opinion, how do you see the market going as in prices on the homes? Do you think there's a possibility they might go down? Do you think they'll go up?
Yeah, so that's one of those things we were sort of talking about earlier. And it's like, I wish we had the crystal ball in order to tell you that is what I'm seeing right now is not as many. It matters what demographic you're into, like what price range you're looking in. So like first time home buyers, I think that they're still going to see, sort of a more difficult time. I know recently there was a house, I think that there were like 50 people had like 50 showings had gone through this one house, you know what I mean? That was in the 400s.
Which is priced priced well, or
exactly.
Oh, okay, like that's lower price.
Yeah,
point
so there's a lot of
there's
a lot of people in that price range.
Oh my God, something under $1 million, like everyone wants. Yeah.
And with certain houses too, I think that there is two demographics looking at that, at that number as well, like that sale price, because we have maybe the boomers who want to get out of their big $4 million house, maybe get some, get the equity out, right? So they're selling their 4-bedroom colonial, getting 1 million, 1.2, whatever they're getting, wherever they are. And then they want to just buy something smaller for cash and then have another, maybe half of that put in investments or something, So you have two demographics looking at the same price range, which makes it a little difficult.
And that's like virtually impossible to do right now. And that price point's like a unicorn in this area. Yeah.
So right now I feel like we're just sort of like what the houses are priced. Like, and I did do some statistics on that too. Recently I just did Pembroke because I'm working on a new GPT that I'm creating where I can just like put in the information I want and get all those statistics out immediately. The prices, I don't see them going up much more.
I think as hopefully we see interest rates come down a little bit, if and when we see interest rates come down. First of all, they're let's hope that actually they don't go back down to like 2.5% and 3% mortgage rates. Because if they do, that means we're probably in a really bad economic situation and we had to lower rates that low again. So let's kind of hope that doesn't happen. But even if we see interest rates fall a little bit, 1%, if we see from 6.5 to 5.5 or 5 or something in that range, I think we'll start to see people being more comfortable making a move, and I think we'll see the lock-in effect that we talked about earlier in the show become less of a concern and less of a phenomenon. And also, I don't know, I just want to talk about like population growth here for a minute, because housing demand, right, is really over time is tied to population growth. And aren't we seeing, okay, so I'm talking about over a long period of time, right? Like a generation or two. But, as we see population growth potentially slow, right? Isn't our birth rate now less than 2 per married couple, right? It's like 1.8 or something. But I think the population growth that we've seen has really been immigration. And if that slows substantially, are we going to see less demand? And thus, prices come down, or at least stabilize, or at least not go up as quickly. I don't know. I think the combination of those things, of course, that can take quite a long time, especially the latter.
Yeah. And I do think, and when we had, like I was saying in our earlier show, is I have my weekly meeting with the contractors, Stonebridge Homes, where I have 2 developments with them. And I said, if I was a builder and I had the money right now, and Kristen Howlett, who's on the show a lot, she was actually on, I think, last weekend or the weekend before, full-time real estate agent here at Boston Connect Real Estate. We've had this conversation here in the office a lot lately, is we have so many older boomer clients that want to sell, and they want to be in a 55 plus development, and there just aren't any really around. So when we see those come on the market, by the way, those are the ones that are going fast and furious. Those are the ones that are paying cash because not because they're, I want my offer to be, I have cash. That was the whole mentality. I'll be honest. A lot of sellers didn't care if it was cash or if it was coming from the bank. To them, it was cash in their bank account. But I think those people are selling their houses, taking that equity and paying cash just because they're older. They don't want a mortgage.
Yeah. I do want to talk about that a little bit. Jay, do you have any more questions for us? I didn't want to keep you longer than you wanted to be.
I just want to make a comment. I just want to say, keep up the good work. We need this program to educate us. It's not easy buying or selling, and we need people like you guys.
Oh, thanks, Jay. Well, we appreciate you listening. Yeah, we appreciate you listening and calling in. So have a wonderful weekend.
Have a good day.
You too. Enjoy it. Get out there and enjoy this weather. It's beautiful. It's going to be a rainy week.
Yeah.
Take care.
Bye-bye, Jay.
Okay, take care.
Yep, bye-bye.
I did want to talk about, though, the sort of the lack of ability to downsize, or the lack of ability to find that, for older people to find a place to age comfortably. Our original outline for today was leaving a legacy, preparing to sell your home, leaving a legacy from a financial perspective. Can certainly get into some of that. But
and this was part of it, though.
Yeah,
like,
I know.
Where do you go?
Right. And that's been the case for as long as I can remember. This is what, my 23rd, 24th year in the business. Like that, for as long as I can remember, it's been really hard. Well, number one, to downsize physically and financially in this part of the world. And number two, like when people, as people age and their kids, become adults and move out and they're looking to downsize, they're also looking at where can I be for a long time, single level living, and where can I age in place, right? And I just think it's always been really hard for as long as I can remember, in Massachusetts, Eastern Massachusetts. And we've talked about, lack of land, and homes are built, bigger homes are more profitable for builders on small plots of land here in Eastern Massachusetts, versus what would you talk about earlier in the show, Dallas, right? Lots of land out there. And so for a long time, people would I'll just go to Florida. And for like that, last couple decades, I'll just go to Florida. I can downsize there. You could literally take money off the table. You could sell high. You could buy lower there. Good outdoor quality of life. Weather, all that stuff. Prices were good. And then we started, and you could get single level living down there, very common.
Yeah.
And then, and so for a long time, we saw that, downsizing was, you were literally able to do that if you were okay going to a place like Florida, very common. And then it seems like we saw the price gap close in many areas of Florida, right? As compared to Eastern Massachusetts, we saw the gap in prices close. So less of an ability to downsize. We also saw people not wanting to completely leave, their family up here. So I'll just buy a second place in Florida, right? So not really, so then owning two properties and the cost of that. And now it seems like the tides are even turning a little bit more now, in terms of a lot of people don't seem to want to go to Florida.
Yeah.
Well, it has been very expensive, number one, from a real estate perspective. Maybe that's changing, but also now the cost of property insurance and flood insurance is and the actual, in rising, natural disasters, storms, hurricanes down there and stuff like that. And people don't want to worry about that.
Yeah.
Literally the worry. And so that seems to be changing a little bit. And people are kind of exploring other areas, or exploring living with family, multi-generational living. We could certainly talk about that, but it's just so hard to downsize around here. I think the 55 plus communities are great, but not everyone wants community living either. But some of those communities where it's a standalone home in a community with a condo fee and you don't have to do the yard work. I mean, that's great. I think a lot of people are attracted to that. How old do you have to be to get into a 55 plus community? Because am I too young? Or I know, I'm kidding.
Yeah.
I think those are great. I think those are great.
But sometimes, that is a good question though, because as funny as it was, 55 plus.
Yeah, I know.
Do both people have to be 55 is a better question, right?
Oh, okay, yeah.
And not, not always.
Oh, okay.
Yeah, so not always.
Yeah.
And that is the thing. And that's what I was saying. If I was to build anything right now, it would be one of those 55 plus developments, because they want that simplified life. They don't want to be worrying about, the lawn and things like that, right?
Yeah.
The shoveling, especially. But we don't have enough of them. And, I have a development in Hanson, and one of the common questions I get in that demographic is, do you have a first floor primary? And we don't. So, and could we? One of our units that we have, we could, but I have a really good conversation with people, and I say, I'm going to be very transparent with you. It financially does not make sense for you to even consider us making this alteration, because you're taking one of the garage spaces. So now you'll have a 1-car garage versus a 2, which many people are okay with. I mean, all our other units down there have a 1-car garage, but now you have, that is your first floor primary. So everything's on the first floor. What are you doing with 1,200 square feet?
I know. What's the point of even buying a 2-level home?
So why bother?
Yeah.
Don't bother.
Yeah.
It's a waste of money to do that.
Because they can't find a single story home that they like. That's why. Yeah.
So right down the street, there is another development in Hanson, and I went there and I went and looked at their units, and they're nice. They're beautiful. They're also starting at $709, right?
Oh my gosh.
Yeah. So it does. It has that first floor primary. It has everything that you want. It's a 55 plus. Only one person has to be 55.
Oh, okay.
So, that's what people are looking at. So I'm working with some people right now. I met them at 55 plus right up the street here, and over a year ago, and they asked me if I would help them, with the process of selling their house and buying another. And one of the things I said to them when I went and looked at their house is, why are you selling? Why are you selling this house? They've done everything. Like mechanically, it's great. It has the generator. It has everything and anything that you can think of. And they said, well, we don't have a first floor primary. And I said, but you could take that den, and their upstairs isn't as large. It's like an older colonial style house where the rooms upstairs aren't huge. So
Okay.
would it be a waste of space? Probably, if they're not going to use it. But if they sell that house, let's just say they sell it for 550, 600, then now they have to, if they're going into a
Right.
55 plus, it starts at 709
With a condo fee.
with the condo fee.
Yeah.
Right. So that's what I said to them. Like, you could make this room very comfortable as a bedroom. You could bump this out. You could put in
a master
yeah,
bath.
yeah. There's already a bathroom on the first floor. So it's just a matter of putting in a shower, right? Because you're not going to want a tub as you're getting older anyways, right? Getting up and over that ledge is not easy to do as you age in place. And the woman started crying. And she's like, I know I'm emotional. She goes, but I just expected, like, I was really nervous about having a real estate agent in here. And like that the only answer was going to be that we have to sell, we have to sell, we have to sell. She's like, because I love my home.
Oh.
Right.
Yeah.
So I was like, well, you asked me for my advice.
Yeah.
This is what I think you should do. If you want to sell your house, I can do that too.
Yeah.
You know?
Yeah.
And ultimately, I think, you know, the best option for them is going to be to sell once they find the perfect one.
Yeah.
And we've shown them a couple of houses. Actually, Mark and I showed them a house probably a month or two ago. And she's like, well, what do you think? What do you think? Like, she leans into me a lot that way. And I just said, I think you're trying to force fit this. This is what I think. Like, you're trying to force fit this, and I don't understand why. And I think a lot of it comes from the pressure of the kids because, you know, adult children are worried about mom and dad being in a home, going up and down stairs and things like that.
Yeah.
So
I think this is it seems like this is a real estate market that is, I don't know, kind of forcing people to just modify what they have and make it work. And that's not necessarily a bad thing.
No.
I guess I don't know. That seems like it is what it is. It's like, as I drive around, I just see like a lot of additions and modification. Like, I mean, there's certainly a lot of construction happening. But in this area of the world, we've already talked about not a lot of new construction happening on new plots of land, right? Here and there a little bit. I'm like, oh, there's a plot of land there I didn't even know, but it's rare, right? And so a lot of people are just, you know, again, lock in effect and make it work where you are.
Yeah. And I think a lot of people just want that simplified life too, you know, like they just, it's easier not to sell. It's expensive to sell your house. It's expensive to move to another one. One of the things you said when you sort of opened up this question was, you know, when we see the new construction, we see these huge houses and that the developer wants to build these bigger homes. It's because they have to.
Yeah.
It is not
still the case here.
Cost effective for them to build a smaller ranch because of the cost of building a development. It is so expensive. I mean, to put a road in, the curbing costs went up like 100%.
Really?
Yeah, astronomical. You know, all of these new guidelines and the herding and all these other things that they have to abide by. It's really, really expensive. So I always have to fight for the developers in that aspect because, you know, for them, it might be easier for them to just build some smaller homes. You know what I mean? And
people would love, and there's a lot of people that would love that.
Yes.
Like, can we get some more reasonably priced one level, you know, homes in this area? People would love that. But yeah, okay, that does make sense, which is why we're seeing these developments pop up in this giant, gorgeous home on a little small plot of property, which, and you know, some people might love that. I don't have a lot, you know, a big yard to keep up or whatever. It's just different.
Yeah.
From what we're used to. And
that is the case. I mean, both of my developments, I mean, one is all condos. The other one I have in West Bridgewater, which there is an open house there today. I didn't mention that earlier, but you know, the lots are smaller. Those are 40B developments, right? So, you know, the towns are allowing that. Every town is supposed to be at 10% per state guidelines. It just allows people to, you know, builders to do, you know, more homes on smaller lots, but 25% of that development has to be and go towards affordable housing. It's so funny because every time I talk about this, and I've done a complete show on my show about it, is, you know, people are affordable housing. And I mentioned earlier, I'm on affordable housing in Pembroke, but they automatically think, and again, I grew up in Dorchester.
They think like the projects.
Yeah, they're thinking Old Colony projects in Southie or something, right? Like, and again, you know, those were all, you know, and not that there's anything wrong with those either. It's just that I think that's the mindset that people have, not in my backyard mentality. And I hate that.
Yeah.
And if they went to Dallas for one day, not only do they have a lot of land, their houses are like you could reach out the window and touch the other house, and they're all single family.
Oh my God.
Even the amount of land they have no yard.
Yeah. I know. I have a friend that from college that lives, I think it actually is in Dallas.
Okay.
And big, beautiful, gorgeous home, probably like 4,000 square foot, gorgeous brick, beautiful home. And the backyard is like as big as where we're sitting right now.
It's
wild. Like, yeah. And literally you can touch the neighbor's house.
Yeah.
So it's kind of like condo living, but not quite. They're not literally sharing a wall. There's that air buffer between them. The air is a good buffer.
Yeah.
It's a good sound buffer.
Yeah.
Oh, I totally lost track. Okay.
Yep.
But yeah, it's just, and I don't see that changing in terms of more, one level, more affordable homes being built in this area. I don't see it. I don't.
It's going to be really, really difficult to do, just because of I said the stipulations and regulations that sort of revolve around it, and how difficult they make it for the developers to put in. And don't even go there. Everything has to be electric now, but it's really difficult to get the national grid or whatever companies in there to get the electricity on to these developments.
Oh, really?
Oh, yeah. You could be waiting a year or two
to get electricity in, just because they don't.
Yep. Okay.
Well, okay. Okay. We are going to take a break. You're listening to McNamara on Money. I'm Alyssa McNamara Reed, joined this morning by Sharon McNamara, the host of Talk Real Estate Roundtable and the broker owner of Boston Connect Real Estate. And my aunt. And I was telling Arden, my youngest daughter, about, I'm doing the show with Sharon, and she was like, who's Sharon? And, and my aunt, and somehow came out that you're just a few years older than me. And she's like, what? How is that possible? It just
it's so funny. Well, and everybody thinks your dad is my dad. He does not like that.
We'll take a break. And then we were getting into how big families were a generation ago, and now how they're very small. But we're just taking a quick break. We will be right back.
Are you ready to get organized? Let's consolidate those old accounts and make sure your investment strategies are appropriate. This is Kirk Reed, a certified financial planner with McNamara Financial in Marshfield. Find out more at McNamaraFinancial.com.
This is Mike McNamara. Well, 2025 is shaping up to be an interesting year. New guy in the White House, war in the Ukraine and the Middle East, mortgage rates are high, savings rates are low, the bond market is wonky, and the stock market is at an all-time high. You're probably worried about your investments. Maybe we can help. McNamaraFinancial.com or 781-834-2010.
Hello, I'm Justin McNamara from McNamara Financial Services. Life is full of big financial decisions, and if you're looking for someone in your corner who will be there for the long term, give us a call. McNamara Financial has been giving financial advice for 35 years and counting, with no advisor turnover. We're here for you today, tomorrow, and for years to come. Give us a call at 978-256-7447 or visit McNamaraoftheMerrimack.com.
Hi, this is Alyssa McNamara Reed. Bear with me as we need a little compliance disclosure. In our practice, we give financial advice to our clients. We know their financial situation in detail before doing so. That's generally not the case with callers we speak to on the show. We can't give truly meaningful financial advice because we don't know the detailed financial situation of the caller. We just met. Any suggestions we make to callers are generic in nature and meant to steer the caller in the right direction. Callers should check with their own financial professionals before implementing any suggestions that we may make. At times on this show, we talk about investments and investment performance. Investment returns are not guaranteed, and past performance does not guarantee future results. We're back. You're listening to McNamara on Money. I'm Alyssa McNamara Reed, joined this morning by Sharon McNamara with Talk Real Estate Roundtable, the show right before ours on Saturday mornings, and also the broker owner of Boston Connect Real Estate here in Pembroke. Good morning again.
Good morning. You can call me Auntie. That's what we were talking about. So
I know.
I doubt your girls are listening, but
I do. But I was just talking to my daughter about that, and I was explaining, Sharon's just a few years older than me, and she was like, couldn't even fathom how that was possible. And I was, I feel like this, I don't know, does this tie into our discussion? Is that how common it was a generation or two ago to have a really large family?
Yeah.
And like, my dad is one of, six. Mark is one of six. My mom was one of six.
I didn't realize.
Yeah. And and Arden was talking about, Kirk's dad was one of seven. I think Kirk's mom had a smaller family, was one of three, but it's just so common to have like 5, 6, 7 kids.
Yeah.
And it's so hard to imagine that now. It's very rare.
Yeah.
And we were just kind of talking about like, why that is. And I just was explaining, well, a generation or two ago, well, probably birth control part of it, right?
Yeah.
But also many women didn't work and were home with the kids, and that was their role in the family. That was their job, and not many of them worked outside of the home, right? And could had the time and to take care of a bigger family, and so how much easier it was back then to live on one income.
Yeah.
And
or the husbands had a few jobs, right? Like Papa,
okay, fair enough.
right?
Yeah,
Papa had a few jobs.
fair enough.
So
Right.
Nana could stay home.
Right. Okay.
Yeah.
Yeah. Fair enough. And but that's just it's so hard to live on one income now. I think real estate is certainly part of that.
Yeah.
I think college is part of that,
Yeah.
and the and that ties into like the expense of raising a child now. We've also I don't know. I'm in the club sport world. Like that is crazy money. And that was not a thing when I was a kid or not commonly a thing. Now everyone's in a multiple club sports. I'm lucky my kids are only in one.
It's expensive.
It's expensive. And
Yes.
The dues and the travel. It's just and it's like you're just like step back and that's ridiculous. But it's the world we're in. I don't know. And so it just but that's so hard. It's just so hard now. I think real estate is part of it.
Yeah.
We've seen real estate growth and the value outpace inflation and outpace growth of wages. And so in inability to afford maybe what we want to afford. Also, I think that quality of life has increased and automobiles have nicer and more expensive. And just like we've been accustomed to,
But
this is what we want.
We have an instant gratification in this, in what we have right now too. And it's funny because we were talking earlier in the show that, Mark and I went to Dallas to visit Mackenzie. She just, she's now the director of health and wellness at University of Texas, Dallas.
Okay.
And amazing campus, by the way. And they we went out to dinner with her one day and like she got really emotional and she was just like, I'm worried about starting a family. She's 29, her boyfriend's going to be joining her soon, and I'm sure that they're thinking about marriage and children. And Mackenzie always, I think she can picture herself, her kids eating dirt and her giving them toast and honey, right? Like she's just that type of girl, like earthy.
Good. Think that'd be great.
Yeah, I know, right? Like let's get back to some of that.
Yeah.
And she got very emotional and she's like, I'm really nervous. She goes, I think about like, look at trying to buy a house and like I'm putting all of my savings and I'm working so hard. And in her field, she's only going to make a certain amount, right? And she's like, I'm never going to be able to afford to let my kids do club volleyball or club hockey or any of the, she goes, I won't be able to. And I go, Mackenzie, I promise you'll find a way. And I hate to say it because you are right. Things are much more expensive. But, when Mark and I bought our house for $137,000, I was like, how are we going to do this? Right.
Yeah.
I'll never forget. The girls were maybe like 1 and 2 and your dad came to the house to tell us we had to be saving $2,000 a month in order for them to go to college. And I went into the bathroom and cried.
Yeah.
I was like, $2,000 a month? Like we don't, we don't even. And we did without. And I wonder if that's like, it just doesn't seem to be the climate right now. No one knows how to, we had bagel pizzas instead of going out for pizza.
Yeah. Well, some people do well with a little fear and they turn that into motivation. I think a little bit of fear is good for some people. I don't know if that's all people, but I think some people will take that and that'll be motivation and you'll work harder. And Mark probably went out and worked harder and took on more jobs. And then, you went out and you worked hard and you started a business and like, and you do certain things to accomplish that goal, but that was probably based on a little bit of fear.
Oh yeah.
And I think, good responsible behavior is often driven by that, by the worry, by the fear that I'm not going to have enough. So I'm going to save more. I'm worried I'm not going to have enough. I'm not going to save more. I'm going to save more because I'm worried. And that, and the people that I know that are still worried and nervous that they don't have enough and they can't spend, they're much better off financially long term. They're much more comfortable financially in retirement because they had a little fear in their life, maybe sometimes too much. We don't want people to be too fearful, but it does drive good financial habits and behaviors. And Mackenzie's smart to have a little worry and a little fear. And I hope that doesn't stop her from having a child or 2 or 3 or whatever. But she's what, Gen Z, Gen X, Gen Z. She probably is Gen X, but like Gen Z is like not having children. They're like having a dog. And you know, maybe that'll change a little bit, but like there's a lot of research and articles I'm reading out there is like they're like
they're choosing not to.
They're choosing not to because they think they can't afford it, or maybe they don't want to afford it. They're you know, they want to travel, they want to do this, that, and the other thing. They want to have a condo in, you know, the city. They want to drive an Audi, you know, and they're making a choice. It is expensive to have a family, a child and a family, and so I don't know, population growth, maybe that continues going down, which is maybe that affects
I was
real
reading
estate
an article.
values.
I was reading an article about that as well, as you know, that older generation. One of the other things too is I think with, you know, the older millennials, let's just say, you know, 89, right? Is that where it starts? Like, you know, they also saw what happened to their parents when their parents lost everything in like 2008, 2009, right? When the market crashed and everything.
Sure. Yep.
So I think that their perspective is looking at that fear of seeing what had happened. They were old enough to sort of understand, well, like, wow, mom and dad lost everything, or, you know what I mean? Foreclosed homes, all those things. That maybe it comes from a place of fear there too. But the other thing that you were saying is, you know, we didn't live as long either, right? So like having bigger families, you know, mom was able to stay home. And I think like I was able to stay home with my girls when they were younger. Then I did smaller jobs. And then like, you know, I worked at the gym because I couldn't afford a gym membership, you know? And then I did little jobs. So I did party like candles. Like I sold candles.
Oh, yeah.
So I could just do, you know, like enough for gymnastics or whatever. Like we were fine not having the extras, right? But now we're thinking about this sandwich generation, and we were talking about this off air too, like what I'm going through right now. And that's why I think we're seeing a lot of like multi-generational living as well. And you know, I was recently invited to one of the people buying a new construction. They're Indian descent, and they have these big rituals with blessings and all this on their house, and they dress up beautiful. It's a really, really nice thing. And I see their community coming together and how they take care of like like the elders. Like every time we're talking to somebody, there's 2 things that they're like, well, when my mother and father come over from India for a month or 2 or whatever, you know, like they're coming over to help watch the babies. And then when they're getting older, they're sort of helping, you know.
It takes a village, right?
It does.
And generations ago, people literally had a village, right? Or, you know, I guess we probably have to go back several generations where people had actual villages to raise families. And then, you know, and then over time, right, people are more geographically spread out. Mackenzie is a great example of, you know, late 20s, and I'm, you know, doing my thing, and I'm moving to Texas, and so apparently happy, and like, you know, life is good and all that. But like, you know, she's a great example of, you know, I was just reading an article about, you know, a situation like that where very common to up and move away and have your own adventure. And you know what? That's great.
Her and her dog
20 somethings. That's great. I love it. And then you know what happens? You know, sometimes, you know, you have a kid and you realize daycare is very expensive.
What is the cost of daycare these days? Astronomical?
A couple thousand a month per kid.
Wow.
I don't know if it's much less than that. And you got a couple kids in daycare, like $4,000 a month, plus your mortgage is now $7,000 a month. Like it's crazy numbers. And also I think like a bit of lack of availability of daycare, right? And so waiting lists and things like that. I was just reading an article about that. I think that was in Massachusetts, but I'm not, my kids are older. I'm an old mom now, but yeah, very expensive, and maybe can't even get it. And then, you know, and lack of affordability, like we just talked about, sometimes to live on one income, it's very hard. And then what happens is, and then, you know, Mackenzie might be an example of moving back home because she needs her village. I don't know how people do it without their family and their village. I was very lucky to have my mother and my mother-in-law help when my kids were little. I couldn't have worked otherwise. I didn't even work full-time, I worked part-time, but like, you know, I don't know how people do it without their village. And I think we're seeing that, you know, that the villages maybe are getting smaller or something. We're recreating villages, and what I mean by that is like, multi-generational living is become more common. I'm a great example of that. I live with my dad, never been happier, like all good. I have a lot of clients tell me that, I'm moving it, whatever direction it is, their adult kid is back with them, or they're moving in with their adult kids, and I think it's awesome. And sometimes I feel like people are kind of, clients are like a little embarrassed to tell me the situation. I'm like, stop. But first of all, no judgment, and I think it's awesome,
and it's happiness on both sides. By the way, I just want to tell you, like, it has brought youth into your father, right? I mean, he loves it. I mean, we'll go over there and play Mexican Train with him or whatever every so often, and
better you than me.
I know. Sorry, and the kids' pictures, and the things, the school projects, and the things that are just everywhere. You know what I mean? With 3 girls, young girls that are in and out and everything all the time, and it's brought youth back to him. And I know, like, I have another friend and her daughter. They were having their first baby, and they were like, we can't save enough to have the baby, because people are getting married later also. Right. Now they're having babies later. And now you can't possibly save in order to buy the house and have the baby at the same time.
It's very hard.
It's so
life
hard.
is very expensive.
But I think when I think about, my friend that is going, that is doing that right now, I see the joy on both sides. It's better for, the young girl who just had, the baby, young girl. I mean, she's 30, right? She just had, her first baby. Her and her husband are perfectly fine there. And then her mom and dad are perfectly fine having them there and enjoying the baby. So maybe that's what we need, is the world to get back to that. And I know I'm supposed to be selling real estate, but like, I'm all about people staying where they are.
I know. I mean, certainly right now. I think it's definitely becoming more common. I think so. Hopefully it changes over time, that people aren't like as embarrassed to talk about it and admit it. But I'll admit right here, I'm a 44-year-old successful professional, and I live with my dad. And I'm so happy that I do. And it's great. But I think that's changing.
Your role eventually, I mean, your dad isn't there yet, but like, you'll soon, before you know it, you're going to be where I am. You know what I mean? And my responsibility is to take care of my dad. So I mean, my home definitely isn't set up to have him there. And the level of dementia where he is right now, I couldn't possibly take great care of him. So
well, one of the things we had an outline about about aging parents and things like that, and I've talked with a lot of, think about a situation. I've talked with a lot of clients over time that the sandwich generation, right? We were just kind of talking about that off air, where the mid to late 40s, the early to mid 50s, generally the female, right? We're both female. We're off, not to be sexist, but often the female, primary caretaker for kids, and then the kids get older and kids are kind of still around, and you're kind of still caring for them, and as the same time as your parents are aging. And what if you're trying to work, and like fitting all that in? I mean, it's we're only one person, but very, very common to be in a situation where you're kind of caring for both at the same time, and don't forget about yourself, please. Right. And
I want to start a support group for all of us, right? So if you need that support, call me.
But like, and then I was thinking about, one of the things you put on your outline is, preparing mom and dad's home for eventual sale or something like that, right? When mom and dad eventually pass away, and taking care of the home and eventually selling it and all that stuff. And I think so many examples of clients that are, talking me through their lives, and and their aging parents and their situation, and helping their aging parents. And nobody calls it a burden, but I, that the responsibility of, I'm going to check in on mom or dad, or I'm going to mow the lawn because dad can't do it anymore. Or I'm, I'm where, and like the physical, geographical, like the time and the commute. You were just talking about the commute to Everett to visit your dad. I mean, that right there is a burden, right?
Yeah,
the time,
I am exhausted.
Yeah, and
2 hours in and out of Boston. I guess been exhausting.
Where I'm going with that is like instead of you driving to dad's house to mow the lawn, like I'm there and I live with dad, and I'm just going to mow the lawn. And that's just like, it's just, I don't know, things are just, can be
and
easier.
It's interesting too, because that is some of the things when I'm talking to my older clients, they don't want to be that burden, and they don't want to have to depend on their kids. And that's where the scary place is for me, that they're not having the conversations with their adult children about where they are financially and everything else. Or, again, we're all busy, right? Look at you. I mean, you have, the 3 girls, they're in sports, they're doing this, they're doing that. You are doing so many things, working full time. You're not, if you weren't living with your dad, you probably wouldn't visit him as much as you think that you possibly would. It just doesn't happen.
Right.
And I've seen many, many clients, and we had a show last year on this, and how many clients I had last year. They get to the house and they're like, I didn't realize how bad of a condition my mom and dad's house was in.
No.
So now all these things that have to be done,
yeah.
right? And, I didn't realize mom and dad got a reverse mortgage.
Oh, yeah.
And now this is what the interest has piled up. So I think that the older generation is embarrassed to let their kids know, or maybe they have the mentality it's like it's none of their business.
Well, I do certainly think that that's the case. I think there are situations where they don't want to probably admit vulnerabilities, right? That mom or dad, even while aging, they've always been in the role of, I care for my children. I'm responsible for my children. They're in that role their whole life.
Yep.
And they don't want to be a burden. Nobody wants their kids to worry about them. That's not the kid's role. That's my role as a parent. I'm always going to worry about my kids and provide for my kids. And I can't, you can't imagine that ever changing. And I think, I think admitting vulnerabilities or weaknesses is very hard for like everyone.
Yeah. Yeah.
And so, there's certainly some of that. And also, maybe they think it's none of their business, but and on some level it isn't, right?
Yeah.
Like if you're an independent financial, you're an independent financial unit than your adult children at some point. You want to be, right? I think it takes longer these days for your adult kids to become financially independent. But if you're 75 and your adult kid is 45 and married in their own family, and you're your own financial unit, on some level it's not really my kid's business if I take a reverse mortgage or not. If I already raise them and maybe help them pay for college or whatever, and I'm done financially, and then mom and dad take care of yourself as you age. I think there's nothing wrong with I think there's nothing wrong with I'm going to spend my money. I already took care of my kids. They're fine. They've got a good job. Like, I'm going to enjoy my life and spend my money. I think there's nothing wrong with that mentality. And I think you mentioned reverse mortgages, and I think there's nothing wrong with people that use them if it makes sense to use them. And some people are like, my kids are fine. I helped them enough. I'm going to take a vacation and spend my money and enjoy my money and my equity in my home. And I think there's nothing wrong with that. But I do think giving in for, it does make things when mom or dad passes, it does make things easier to settle when someone is in the know regarding the financial situation, whatever it is.
But going into assisted living, and the one example I'm thinking about is, they didn't realize mom and dad had gotten a reverse mortgage. Dad had passed several years ago. Mom is at the point where she needs to be in assisted living, and they just found out about this reverse mortgage.
And they had to sell the home.
They had to sell it. So she didn't, she didn't do all that pre-planning with the 5-year look back, all of that other stuff, putting everything in a trust and all that. And if they had, this would have come up. But she was actually in her 90s too, right? So now mom is not able to be home alone. I went in, I did an evaluation on the house, and they were because they've had this reverse mortgage for a long time. So the interest built up, right?
Especially now.
Yeah.
Yep.
And the value of the home was just about equal to what they owed.
Oh, okay.
And I said that really the only people that are going to make money here are the real estate agents.
Yeah.
I think that you should just, talk to the bank about giving it back to them, or just try to sell it yourself to somebody that you know what I mean?
Okay,
I brought in some investors and things like that. The investors were making offers that weren't even the total amount of what the loan was due.
Oh,
so
that's okay. And that's generally okay in the reverse mortgage world, that the family doesn't come out of pocket
exactly.
in those, but still
So, and that's,
they would like to, they would like to net a little, but
and that's where I get into, I called David Tortolot, and he was talking them through, and actually, I think David actually may have referred them to me. And I was able to then help them that next stage. Here, you need to talk to this person about getting on Medicaid and getting her there and everything. So I was able to help them in that capacity get to where they are. Mom is now in an assisted living, and they did end up selling the house, and they had to, whoever bought it, they ended up having to come to the sellers had to come to the table with money. So the kids ended up paying off that.
That doesn't sound right, but okay. Oh,
Yeah.
maybe like the fee, the attorney fees or something. But the mortgage doesn't sound like a reverse mortgage. Generally, you don't have to come out of pocket if that's underwater. A reverse mortgage, but okay.
Yeah.
It is helpful for the family to be like in the know, because what if the family was, banking on the equity in that home in order to pay for mom's assisted living, and then they find out, oops, there's no money there. Certainly helpful. And I do encourage my clients, as they age, does it make sense to loop in one of the adult children's, who's going to be the personal representative of your estate, or the, the backup trustee of your trust, if there's a trust, who's going to be responsible for things, and helpful for them to be involved usually. Right. And it's usually like, a trusted member of the family, right? That's, really just looking out for mom or dad's best interest. And, unfortunately, sometimes, I think I always advise my younger clients when we're doing retirement planning, if they mention an inheritance or a possible inheritance, I always caution them, like, okay, let's not plan your future on this, because I could tell you stories, longevity, cost of care, what you just mentioned, reverse. What if there's something going on that you don't know about? What if something happens that you're not anticipating? So anyway,
and when did they become a world of just looking for that inheritance? Like,
well, life got expensive, and not only that, we talked about, cost of raising a family has gotten more expensive, real estate's gotten more expensive, but you know what? Look at the life we're all living now, and the standards that we have versus 50 or 100 years ago.
Yeah.
Like, I'm sorry, my kid thinks that I need to buy her $1,000 iPhone. I'm like, you're hallucinating. What? Like, why is that something that you're expecting? You know what I mean?
My
like,
favorite commercial
quality
was,
of life is,
was it Arden that wanted like a scooter or something, and you
the rolly shoes, literally. That's a true story. She wore them once.
Yeah. Well, and that's the thing too, is,
but people often can't afford the life that they want to live and are living. Hopefully not my clients, but but I think there's a lot of people out there that really are just scraping by, not planning for their futures, and they're maybe planning to inherit money, and that helps to solve some of their problems. It's not a good plan.
No,
it's not a good plan. If an inheritance comes your way, great. That's kind of what I say to my clients. Like, that's great, but I wouldn't plan on this, or I really caution people against banking on an inheritance, because cost of aging, it can be quite substantial. And even if people plan for it, you mentioned, putting a home in a trust and 5-year look backs and things like that. And we would need another 2 hours to really talk through that. And ideally we have an attorney here when we do it. But I guess I would just say, like, that's also kind of imperfect, like, and from a tax perspective can be quite expensive, and it doesn't solve the problem. And there's still a lot of, it's still expensive, whether you plan in that regard or whether you don't, and somebody needs care in a nursing home.
And too, I do think that, a lot of people have the equity in their house, and maybe their thought was, maybe it isn't for inheritance. It is for when I do go into a nursing home. So
absolutely. I've had people say that to me.
Yeah.
And, and again, we would need a long time to talk about, like, planning for long-term care and the insurance. And that's, in my opinion, that's not a great option anymore. That's very expensive, gotten more expensive. But a lot of people, in order to plan for aging, it's really hard, and it can be really expensive, or it can be zero.
Yeah.
And so it's hard to plan for, but a lot of people are like, well, I'll just, I've got like $1 million of equity in my house, and I'll just plan to use that. And I'm like, okay. Yeah.
Well, I did
sometimes that's a great plan.
Yeah. I did have a
so
client.
The kids better not be banking on it.
Yeah.
I guess,
Yep. One of my clients from Duxbury, that was one of the things. And he was, he's, in his later 60s, and still, he was I'm not going to say still, but living at home with his 90-year-old mother. She had to go into an assisted living. He had to sell the house because they didn't have everything in trust and all that other stuff. He never asked those questions. And he had to sell the house in order to, go forward with his mother, for his mother, to pay for his mother to be there.
No.
I actually just saw him the other day. I picked up a little gift that reminded me of him. So I saw him the other day, and he's like, I just feel grateful that my mother had, we had that equity, so I can pay for it, because I'm in a different situation when my dad has Medicaid,
Yeah.
Who can afford $15,000 a month?
That's more than that too.
Yeah. I mean, on top of living yourself.
Right.
You know what I mean? It's like, more expensive than putting a child through college.
Yeah.
You know?
It certainly can be.
Yeah.
Yes. And not to mention sometimes that when you're accessing the money that you need for that at that stage of life, often it's coming out of a retirement account. And so if you need $15,000 or $20,000 a month, guess what? You need $30,000 a month out of that account to pay the taxes.
Exactly.
Like it's just, it's very expensive. And for that reason, kind of nobody wants to plan for it. It's very hard to plan for because sometimes people pass away without needing care. But it's, I don't know, maybe it's more common than not to need care. But it's just,
and we could have another whole nother show on just that topic, right?
Yeah.
How much time do you have left?
We have a couple of minutes. We have 3 minutes. That was fun.
Yeah. It was fun. Tim, were you keeping up with all that? I don't know if Tim is still there.
Oh, sometimes he pops out and then he pops back in.
You had a question?
No, I was just like, are you keeping up with all that? I love when Alyssa gets on her. Each of us get on her.
Taking copious notes.
I was worried I wouldn't have the energy for 2 hours this morning, just not getting a lot of sleep. But
you got it.
I always get into it when I always get into it when we start going. But
and it is like I was saying, like this whole sandwich generation. And I know that we were sort of all over the place with little bits of a lot of different things today. Maybe we should do this more than once a year.
Yeah.
And I do feel like the struggles are real when you are trying to I feel like I'm just getting out of that stage where my girls are very self-sufficient. They have their own employment. They're doing well. For me, it's like, okay, I just turned 57. I want to live this life with my husband who's 63 and enjoying it with him and maybe travel and doing those things.
Yeah.
And now I have this, this other chapter with my father, just going away for one weekend has turned into a disaster, so
he's lucky to have you. It's tough. All right. That is our cue. You're listening to McNamara on Money. I'm Alyssa McNamara Reed, was joined this morning for 2 hours by Sharon McNamara with Talk Real Estate Roundtable. And also broker owner of Boston Connect Real Estate. You can find out more about me at McNamaraFinancial.com or McNamaraoftheMerrimack.com. And we turn all of our shows into podcasts. So you can search McNamara on Money on your podcast app. And your
Boston
podcast
Connect,
is
BostonConnect.com, or you can go to the podcast app directly, TalkRealEstateRoundtable.com.
Awesome. That was fun. We should do it more often.
Yes.
You're very hard to schedule with, but I will do better. You're busy. You're busy. We're both busy.
My father, and you can take my morning hour anytime you want.
All set. I'm good. I like my 1 hour, 9 to 10 time slot. Thanks for listening, everybody. Have a great weekend.
Bye, everybody.
Talk to you next time. Bye.
The South Shore's first choice for live team coverage of breaking news, emergency traffic, and severe weather. 95.9